All right, all right, all right. What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to make it in today on what is officially our last Daily Market Commentary of 2020. Hip, hip, hooray. 2021's on the way. No, it's our last DMC of the year. Tomorrow we got a live trade room, and then Friday, obviously, the markets. We're not going to be delivering a DMC on Friday morning. So we're going to close out the year today and get ourselves up and rolling as our day kind of moves along. So if you're new to the channel, make sure you click the subscribe button, the notification bell. If you're a regular returning user viewer, then thanks for coming, and we're glad to hear you. And make sure you hit the thumbs up button. It means a lot to the computers. So let's go ahead and get rolling. Not a whole lot to talk about today regarding big major market movements. I'm going to shrink my head. And when I look at today's market movements, I'm starting in the ES. You know, we talked yesterday about that 5 o'clock level that was formed, knowing that those 5 o'clock levels aren't always the best ones, right? Formed at 5 p.m. And so we did come back into that area and then just pierced just a little bit below it, came up a bit, and then cut right through it. And it didn't hold at all yesterday. Matter of fact, we wound up actually being down a little bit from the highs in the S&P. Also, the NASDAQ did the same thing in the NASDAQ as well. So wound up being down a bit from the highs in both markets, although the NASDAQ is a little stronger today. We had that really strong move up, down, like it was just a whipsaw effect there right around 9 o'clock. So what am I looking for today? Well, what I'm looking for today, the fact that we've come down a little bit lower. Today's our last real trading day of the year. I mean, we've got half a day left, and we'll see what happens with this trading that we have today. But I definitely see, a bit of a lower high in here, and this put us to a slightly lower low. So I wouldn't be overly surprised to see price break below 37.14 and then make it down to this 36.90 area. If we got basing in here, I think that's going to be okay. That's the only way that I can take a short. There's no reversals up here that I'm going to be taking. I don't really see a great opportunity for reversals. You could even get short on the 15-minute level on a breakdown below 37.29. And then you can look for where the opportunities are going to be. But I think that when I'm looking at today's markets, what I'm going to assume is that we're probably just going to chop sideways. You may get a little reversal off of this area up here, this little wick over wick, but we're basing in front of the level, which makes it a little bit weaker, and something that I'm not as interested in doing, and probably not as interested in trading. So something that I'm going to probably stay away from overall. So we're gonna get half a day of trading tomorrow, if I'm not mistaken. Oops, wrong button. I think tomorrow is half a day of trading, and then Friday, New Year's Day, is there's no markets. So. Oh, it is a full trading day, Dennis. I thought tomorrow was half day. I guess I was incorrect. I thought it was a half day on New Year's Eve, and then a day off on New Year's Day, kind of like Christmas is done. All right. So on the ES, that's kind of what I'm looking at. Now, the NASDAQ's a bit stronger this morning. The NASDAQ, we had poked above to this 12,918, and now we're chopping fairly sideways in the NASDAQ. I'd be less surprised to see a NASDAQ pop than any other market. And if you do take a NASDAQ pop, the tightest your stop can be would be at about 12,872 below here. So depending on your account size, could be fairly wide if you want to participate in that. Once again, I'm just going to be quite blunt with you. I don't know that it makes a whole lot of sense to fight those. All right. Yeah, thanks, Dennis. I hadn't even looked, to be quite frank. I didn't plan on doing any major. We've got our DMC tomorrow. I thought it was half day. I was going to look at it tomorrow morning. So now the Russell yesterday, we did talk about this head and shoulders with that weaker right shoulder that we had talked about, and we did get a big breakdown off that Russell move. Big breakdown off that Russell move. We said that this area here would be a target, but we didn't think that this made sense to go long. And so now on a retest of this area, this area here is still valid on a retest of this area. Although we're near the all-time high, our 4-hour, oops, that's not our 4-hour. Our 4-hour was able to come to a lower low, right? So I'm okay if you want to take that short as an area, as an opportunity on a return back to that level. The NQ level, I think, is really the better one on the upside, and then the Russell is the better one on the downside, which is pretty much what we said yesterday, the same thing. So just kind of keep both of those in mind. The Dow Jones, well, you know, it was, when we were talking about it yesterday, Liz, we had said that it was already fairly close, and that it was okay. I mean, you got basing. Oops. Right here. So it may or may not have been, depending on your comfort level with it. I think it was okay, but not amazing, right? It's not immediately before the level, but it's close to the level. And so it's one of those ones where it was okay to go in with it, but it's not immediately before the level, but it's close to the level, which scores it a 9 instead of a 10. You know, on our breakout scale, but we did get 1 touch, 2 touch, 3 touches, and then, you know, kind of came away. So I was more okay with that one yesterday as a complete flyer. So total transparency, I didn't feel like it was the best breakout, and now in hindsight, it's obviously worked great, but the retest is actually now significantly better. All right. Looking at the Dow Jones, same 5 o'clock level that kind of came through, no big surprise. Yeah, I would say that it wasn't immediately before the level. I would say that it was once again okay. It was near the level, but not immediately basing in front of the level, and I think that's the difference. The Dow's got a little wick over wick 15-minute level here off of yesterday's big move down right at the open. That might be worth considering today. Well, and the reason I say might be is because we are chopping a little bit in front of it. And so knowing that, my stop would have to go here, because it's got to go above the wick of the leg-in candle in the base, right? So if my stop goes here, that's a 1-to-1 reward to risk. There's my 2-to-1 reward to risk. We're kind of basing inside that 2-to-1 region. So it's an okay level, not a great level, and doesn't fit all of our, you know, main trade criteria at this point. All right, so let me share this grid. All right, and then we'll move over to our equities, or excuse me, commodities. Typing the word equities. Can't type and speak at the same time. I'm just utterly useless in much of that way. And it didn't give me the grid. Share grid. Share. There we go. Control V. All right. Next. Energies, metals, all of those fun pieces that are in between. So crude oil yesterday, we said, I don't think there's a lot to trade. And what did the market do? Pretty much what we thought it would do. Nothing. And so what am I going to add to my analysis today? Nothing, right? I don't really think that there's a reason to go in and add to my overall trade analysis. I'm going to leave it as it is. I was trying to double click. I didn't mean for those to grow. I'm going to leave the overall analysis of this trade as it is. I mean, we do have a little area of supply up in there. But that level of supply up in there, we had it yesterday, and we didn't like it yesterday, and we're basing closer to it now. So to me, for those of you that took our iron condor, you're feeling pretty good about it right now. It's eating away a little bit of theta each day, and you're doing fine in that position. And for everybody else that's looking for a directional trade, don't force it. Let it go. Gold. They call him Mr. Same Move. Do it again. Same move one more time, just for your friends. That's the gold's motto. Gold and oil are basically saying the same thing. There's really not a lot of trading going on, not a lot of opportunity here happening. And I meant yesterday to look at an iron condor in gold in our trade room. Let me just take a quick look at one right now, just to see if there's anything worth looking at. For the 9-day position, there's probably not going to be much for the 1-day position, but for the 9-day position, let's see. If we go 1915 by 1845, I don't know, that might be a little, it's not too bad. Maybe it would even go lower than that. Let's go 1825. 1825 by 1820 is paying a pretty good credit. And then if I go on the other side of that, let's go 1920. We'll do 1925 by 1930. Now, the 1925 by 1930 is paying a much higher credit than the 1825 is, 80-cent credit. So your risk profile looks like this, where you're looking at max profit, or your strikes are 1925, 1825, profit of 140, risk of 360, maximum risk of 360 against a profit of 140. So you've got essentially a 40% return on that position, and that gives you a range of 1925 by 1825. So there's your range. The price has to stay in there for 9 days. So what do you guys think? Should we, my gut tells me, when I have something like this, my gut tells me, okay, that's the width of my range. Does it make sense to take this range and just move it up a little bit, right? I might be willing to take less credit to go 1835 by 1935. Okay? 1835 by 1935. Let's just take a quick look at that. 1835, 1830. Not really, Jersey Trader. I don't think we're going to see a big movement out of it. Oops, did them backwards. 1935 by 1940. Okay. So now this evens our credit out at 70 and 60 apiece. And so if we've got it in this way, now we're looking at 1835 by 1935. I think that's probably a little bit better credit. Yeah, I don't think it's a setup at the moment, John, that makes a whole lot of sense. But I think for a 9-day position, you got to remember, of that 9-day position, we're getting today where we're chopping sideways. We've got tomorrow, which is essentially it's not a holiday, but it might as well be. And then we have New Year's Day, which is a holiday, right? So in reality, to me, this is more of like a 6-day position. So I kind of like this one as an iron condor because there's just not a lot from a directional standpoint that the market's giving us. Now, if you don't trade iron condors and you don't trade options, why? Options are a great vehicle. Take a look at them. Learn how to use them because there's a lot that goes along with them. All right, nat gas. So we talked about nat gas yesterday. We said, hey, is there going to be some resistance here? And the thing that we talked about was that we needed a candle-to-candle reversal style entry at resistance for this trade to make sense. Did we get a candle-to-candle reversal style entry at resistance? No, we did not, right? We did not see any candle-to-candle reversal style entry here telling us, okay, let's get in. That's why that says resistance with a question mark. Because I didn't know that it was going to be resistance, and I need a candle-to-candle entry in order to do that. So I feel good about not getting into this trade because it didn't give us the right entry type to do so. When I remember yesterday, when we were looking at this yesterday, we were looking at the formation of this red candle, and we said if that red candle gives us a reversal candlestick, and then we get lower than that candle's low, we have a potential entry. Well, we didn't get that. Okay. Now we are coming up to a gap fill area, and I've not really been using gap fills. If you want to try the gap fill trade on a confirmation, you can do that if you're inclined to give that a shot. I've not been using them as much, but we did see that in the currencies that the couple of gaps that we've had recently have been pretty effective, so it might be worth considering. And then copper is still nowhere near our levels. We didn't make it quite up to this level on that area, so. The tweet hazard. I don't know that the tweet hazard is going to lessen anytime soon. I'm listen. That tweet, the tweet hazard can be there for a while. If you, I don't. By the way, I don't buy too much into social media. But if you read into social media, man, there's still a lot of people out there who think that there's some things that are going to happen between now and January 20th, John. I don't know that. I'm not a tinfoil hat wearer. I don't. But there's a lot of people out there that are saying that, and I don't know what that means and what that's going to be or what they could do, and I don't pretend to know because I try not to get too involved, but it is interesting to kind of see. So, let's see. All right, so those are our commodity markets overall. Let me share this grid. Yeah, Dennis, I'm not buying anything. I've learned a long time ago. I mean, it feels terrible to say this, and I think that and maybe, and once again, this is my personal opinion. It's not everybody, but I think one of the biggest problems is that we've eroded, whether anybody agrees with what's happening or not, we've eroded trust in the American media, the American media and political system. I think the trust has been eroded in that almost to a point of can it be repaired? That's my feeling. I don't, and to me, that's the most depressing part about 2020 is that the trust in all of that, is that the trust in all of those areas are the big ones. So has been eroded, but whatever. Nothing we can do about it. So what I hear and see on the news, I just don't believe it. I mean, which sounds terrible, but there's no reason to do so. So, and that to me is the out of everything, right? The trust in our electoral system, in our media, in social media, all that is really the thing that I hate the most. And so, well, Liz, I had more, right? I had more. I will tell you what's funny is that the most trust I have is in my local news. I feel like my local news is better than anything else I read. So, all right. Anyway, and by the way, that's not all the local news here in Houston, just some of them. So, soybeans, corn, wheat, and bean oil. As I look at those, they're continuing their march higher. Contract rollover occurred in Thinkorswim anyway. As I look at this was a huge run up yesterday that creates this level here. Yeah, a bit of propaganda news, no doubt about it. And interestingly enough, is now the question is, does the market move on fake news? And believe it or not, I mean, I don't care. I know people don't like that when President Trump uses the phrase fake news, but there is fake news. I mean, there's no, now, I'm not saying that the fake news only comes from one side, but it is real. And it's not necessarily fake news. It's just news told from from an aligned perspective, which is what crushes the trust. So, all right. Anyway, sorry, I apologize. Let me get off my soapbox. 1252 by 1249, very strong rally higher in through here. The origin of that move could contain unfilled buy orders left. Price returns to there. That's actually a pretty good level. Do I think we're going to return to there today? No, I don't. Looking at this on the 4-hour, we're a little overextended again. So let's see if that gives us a bit of a pullback Corn, same picture. A little bit of a pullback into this 456 by 454 area would be a place to get into that zone. Wheat, we've got our supply level up above here, 625 by 628. So when price gets up into there, that's where we're going to look for a reversal. I don't know how much I love that reversal any longer because we came close to it and moved away. So with the strength of the other commodities, I'm going to move this to a confirmation entry because I still think that could work. It's got to be confirmation. And then bean oil, you know, this one's gone sideways here a little bit, and that's usually a sign of weakness that we may break down from here. You may get a small time frame day trade to this region here. So could be for a little day trade in there. All right, share this one. Okay. Next, let's talk about bonds and currencies. So we talked about the bonds. Is there anything we should do differently with the bonds today than we've done for the last 2 weeks? No. Look at that. I mean, that's just very sideways. There's just nothing going on. No reason to get in there on that one. On either one of these markets, the 1 hour or the 30-year or the 10-year. So either one of them I stay away from. The euro. So the euro, we got a little bit of a pop above yesterday, a pop above this level in late in the day, and then it came back down below. If you took the breakout trade, you didn't get basing immediately before the level, but you did get a bit of a retest back to the origin of this move, and it's popped up from there. I think that the probability in my mind is that this continues to trade higher, and trading into the upside is the way to go. The question is, where do I get in, right? How do I re-engage on this thing? I think this little 15-minute level here is pretty clean if we can make it back to that area before rallying higher. Or we could give you some more basing up here with the next chance to go up. But I do believe that bullish is probably the nature of the move. Canadian dollar, it is coming up now. We've got a decent little kind of hourly trend here that is formed. Breakout area exists right there. 4-hour position tells us, yeah, it's going up. It's just going up kind of weakly. So 15-minute pullback zone right in here is still viable, although I like the breakout setup a bit better. Yeah, sideways city. All right, and then last one, bonds and currencies numero dos. The New Zealand dollar, we did get a bit of a breakout trade here. Now, if you didn't take the actual breakout, we talked a little bit about this. We didn't get the basing in here, but we did get basing immediately afterwards. Popped up, retested the level a bit, and then has moved. If you didn't take it, don't feel bad. We didn't get true basing immediately before the level, and so I would come to this wick over wick as the better entry if price returns. So that's 7167 by 7161 on a pullback into this zone. Great British Pound. Great British Pound came into our confirmation 15-minute level here. So depending on where your trigger was, you may or may not have gotten triggered in the trade. If you did, it actually did give you a fill if you got triggered. 1, 2, 3, 4, 5, 6 candles later, we had started to move, but not really. Came back up, tested it again, came back down. Now, you're not going to trade this unless you're in the UK or you're in Dubai or Singapore, someplace where, in the US, you definitely wouldn't have gotten into this position because you're sleeping, right? And it's a halfway through the level. I'm not interested in that trade. Now, on a retest, I really like this. Let's use the right drawing tool. On a retest, I really like this because it's a retest of our zone but it's a wick over wick at a kind of a flip area where I think there could still be some orders that were placed in the queue. So that's 3562 by 3556 on a retest back to this level, this area. Another little area that's pretty clean is this one down here. It's just not the best time of day. That's that same time of day on the other markets that got kind of blown through a little bit. Japanese yen. So the Japanese yen, we popped through our potential breakout line, but did we get basing inside that gray box? No, we didn't actually. We cut right through it. Now, if you counted this little basing here in front as close enough, then you're in it for a little run, and I personally don't. I think that's a little too far away. However, retest city, if you will, would be right here. Ooh, I don't like that as much. When I go to a 15, I actually like this considerably more. Now, why do I like that area better than the one above? Well, when I look at the 15 on here, this to me spent a lot more time in the level, and it looks like it's been retested and price has moved away from there. Whereas this area here has not quite been retested, and it was a prior area of resistance that was our breakout trade. So while I think this one still may work and hold some validity, I like the one below it a bit better. Australian dollar, this one just missed us yesterday. Didn't come back into that area. We've been holding off on this one for a couple of days. And unfortunately, we didn't catch this latest ride up because it just didn't give us a strong entry and a reason and a way to get in. And so now I need to wait for the right reason and way to get in. Now, obviously, this is the one that's the cleanest, is this area here. Let's see if we retest it, but it's a great time of the day that it was created, and a pretty strong move where a retest here might make some sense. I think we could also come back into this region here and retest kind of further down at this old area of resistance. So if you don't love this level here just due to kind of recency bias, then I'm totally okay with you taking an area kind of right in here, which would be back down to retesting those highs, which would be right about 76.29. All right. Let me share this one out. So there you have it. That's our final DMC of 2020. Thank you guys for joining us today. It is hopefully you guys got something out of today's daily market commentary session. We want to keep doing these every day as we head into 2021, although eventually we'll probably see some slight changes to the delivery and how we're doing these. I've been working and tweaking some ideas in the background, and we'll see exactly what happens. But as always, thank you guys so much for being here. I appreciate you. Nice, thanks. Thank you, Mr. Tapia. I appreciate it. We do our best to make it a good year. Let's take 2021 and kick its ass. Right? I mean, let's do this. Why not? Right? It's all about decisions, and let's make the choice. Right? Let's make the choice. So I hope you guys have a phenomenal day. I'll be in the live trade room tomorrow morning, but then everybody else, I'll see you Sunday night for the live trade room Sunday night or Monday morning, DMC. All right, buddy. Peace out. See you guys.